The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we close out 2024 and look ahead to 2025, the year ahead, going to be a lot of things that are under discussion in terms of the ag economy and ag policy and so much more, and the broader economy as well. We want to take a look at the year that was and take a look at what might be to come in 2025. Joining us for that conversation, always good to talk with David Widmar with Agricultural Economic Insights. David, welcome back to the program. It's good to chat with you again, and wish you and yours a Merry Christmas and a happy holiday season. Thanks for being with us.
Yes, thanks, Jesse. Great to join you.
Well, let's just start and let's maybe, if we can, sum up 2024 as we reflect on the year that has gone by. Obviously, a lot of challenges in the ag economy, in the commodity markets, farmland prices, you name it, cost of inputs. There's been a lot of things here, and we're closing out the year with plenty of, I'd say, uncertainty heading into the new one. So, I mean, talk about your perspective as we look back at 2024, David.
Yeah, we always find this exercise of looking back at 2024 helpful because at first glance, it's like, oh, nothing really happened. And then we start to dig in and we recap and we review and reflect. And I think it's important to do that. Both, we do it at the ag level, but you could do it for your own farm, your own business, and your own personal life. But, one of the things that was just consistent, I think, is average could be deceiving this year. And so average farm income, for example, didn't capture the full economy. There's a lot of headwinds in crop production, especially corn, wheat, soybeans. Also, hog producers had a lot of headwinds. But then we saw cow-calf producers having a pretty good year in 2024, better than they've seen in the past history, the past 5 or 6 years, at least, I should say. So it's really hard. You talk about the uncertainty moving into 2025, but also all the nuances and the complexity that you really need to lean into to try to understand and explain where we are in the farm economy and where we might be headed into 2025.
Well, let's rope in the overall economy here too, and some of the latest with interest rates and the Fed. We saw a Fed meeting here mid-December, wrapping up with a 25 basis point rate cut as expected. Indication from the Fed that we could see 2 more rate cuts in 2025. Inflation's been sticky, David. That's been a big culprit here. I just wonder, as we close out the year with some of that latest from the Federal Reserve, what does that set us up for heading into 2025?
Well, one of the first things to note is that the Fed back in September had thought maybe 4 rate cuts in 2025 were possible. So this a bit of a pivot or a bit of a new direction or new approach reflects the Fed having some upward concern about the top end concern about the economy, maybe more overheating than super cooling in the economy heading into 2025. And what really is underpinning that is unemployment rates are lower than what they thought they were going to be a few months ago. The economy is going to finish in a stronger position than they thought just a few months ago. And so, if we have a strong economy, it starts to put upward pressure on inflation and interest rates. One way to get really low interest rates is to have a recession. And there's a lot of forecasting on that, but we simply just didn't see that. So again, the Fed, just looking at their own data, not even thinking about tariffs and what that might have to add to the inflation data, the Fed is simply looking at this data. And like you said earlier, there's been a little bit of a sticky situation. I think if you looked at 2024 inflation average so far, it's around 2.5%. It's not there, the 2.5 or the 2.0% threshold the Fed is really aiming towards. So it's not back in the cage completely. And the last thing that I'll add here is that the month-over-month inflation data has been creeping up a little bit. So there's a little bit of a concern that, again, going back to that strong economy, strong performance, that there could be still a little warming up in the economy. So the Fed is going to be moving a little slower on rate cuts heading into next year.
Well, you guys at AEI just had a webinar too, strategies for navigating the farm economy in 2025. Let's talk about that a little bit. And I don't want to give this all away. I know folks can go on the AEI website and take a look, but just overall for you, what are some of the top line strategies that farmers should consider heading into 2025?
Well, I think one of the first ones to think about is, know your cost. That's a common piece of farm management advice, but I think it's important to go beyond that. Producers know their costs, but one of the pieces of advice we have for 2025 is to really think about, what's a price that once you know your costs, sort of there's costs that you have to cover to keep the lights turned on, and there's costs that you would like to cover to grow and expand and meet your goals. And so think about those different cost levels. And so we give the example of, is this a good price to be marketing my grain at? Well, if you're worried about the downside and you're making some profits and you're be able to cover all your debt and maybe make a little bit of progress, it might be worth marketing some of that grain. If you get an opportunity to sell all of the grain at a level that lets you really make progress towards those goals, that can also be advantageous. And unfortunately, sometimes we get ourselves in marketing positions where we're not going to be able to cover all the costs that we want to cover. We're not going to make those goals that we had set for ourselves. But maybe it's an opportunity for us to still stay in the game. We're not going to burn a whole lot of our working capital. And so we might be marketing at a less than ideal place, but it still keeps us into the game. So know your costs, but then go beyond that and know what are the rungs or what are the categories or what are the thresholds that you really need to get excited about or that you absolutely have to cover. That's one piece of advice. The other piece of advice is, we're thinking a lot about ad hoc payments as we wrap up. A lot of, drama in DC as we're recording this. If you're going to, don't plan on these, don't budget for these. There's a long ways away from reality. Even if they sign something with the presidents, we got to wait for the USDA to give us those metrics and those measures for how they're going to do that. And then if there are ad hoc payments, how are you going to deploy those on your farm strategically? We want to make sure we're doing it in a way that puts us into a better position in 2026 and 2027, especially from a financial standpoint. Think about that balance sheet. Think about how we can make sure that we're deploying it in a way that sets us up for future success. We don't want to get behind, an 8 ball by trying to guess when the next payments are going to come and managing our tax liabilities and, using debt or the tax code to shelter some of that. So get yourself into a good financial position.
David Widmar with Agricultural Economic Insights joining us here today on the show. And David, I wonder about this as well. You mentioned, knowing your costs, looking at those costs of inputs and more as farmers are starting to make seed decisions for 2025. A lot of talk already about what that corn bean acre mix could look like for 2025. And I know you guys do a lot of work and calculations there. What's your thoughts on that?
Well, it's leaning towards corn, and it's leaning towards corn more than folks might initially think. When we have a lean farm economy outlook, soybeans are usually, there's a fleet of soybeans because it has a low cash cost. But really take a look at the soybean markets, take a look at that price ratio. It's been favoring corn for 6 months now, but it's trending even more towards corn. We're not going to see something, a price ratio that's historically favorable to corn, but it's a big departure from where we were a year ago. I think we're going to see, as we start thinking about that acreage debate, a big corn numbers printed. It's going to take some soybean pressure out of the equation for the 2025 production and marketing year. It's going to add to corn, but I think it's important that producers really study the budgets. Don't just get focused on, oh, it's a lean year, I want to go to soybeans because that's my go-to strategy. The soybean price situation is really difficult. And the other piece here is soybeans are struggling from a high fixed cost structure. We always think about how are producers going to trim their budgets, and the least appealing, least fun way to do that is to tackle those fixed costs. And I think that's where producers are going to have to spend their time this winter, is looking at the labor, family living, the rent, and the land, and also machinery categories of their budgets.
Could we potentially as well, when we talk corn soybean acre mix, but in some of the fringe acres, as folks like to refer to them as, could we see more wheat, more cotton maybe in 25? Those are markets that haven't been too robust price wise either as of late. So I wonder about some of that as well, David.
Yeah, there's not a silver bullet, for the lack of a better analogy, here in those regions. We're going to see in early January how many acres of winter wheat got planted. The winter wheat, season for planting is behind us. There could be some spring wheat opportunities. There could be some cotton opportunities. But in reality, all these crops are facing a bit of headwind. And, when we think about these tariffs and these uncertainties around tariffs the U.S. imposes versus retaliatory tariffs, we've done some work and thought in this process. You know, even cotton, soybeans usually capture a lot of headlines because of its big footprint on the acres, but cotton has a whole lot of exposure on the trade front as well, even more than soybeans. So I think that producers are just, we're not going to be able to outguess where these markets are going to go. We're not going to be able to outguess where these DC policy is going to go. We just need to, think about what we can do on our operation to put ourselves into a better cash flow position that we can shore up our balance sheets to make sure we have sufficient liquidity and working capital to navigate what 2025 has ahead of us.
David, always appreciate the insight. As we wrap it up, any final thoughts, or as well, give us a plug for the AEI website? I know you guys have a lot of information there as well. Give us a plug for that, and any final thoughts.
Well, the last thing I'll add for you from our list this year was panda diplomacy came back. So a year ago, we were worried about all the pandas that were leaving the U.S., going back to China as part of sort of uncertainty around China diplomacy with the U.S. But the D.C. National Zoo got some pandas back, to San Diego Zoo. So maybe long-lived panda diplomacy. We'll see how that plays out in the second round of the Trump administration. But that I think could be a sign of some less uncertainty or more confidence. It's still a lot of uncertainty, but I think that the fact that there's been some relations between the U.S. and China could be favorable. As always, you can check out our website, aei.ag. We write a lot of weekly content. We have the AEI Premium subscription that folks should take advantage of and take a look at.
AEI.ag for more. With that, David Widmar, Agricultural Economic Insights. Thanks again for joining us, and we'll talk to you in the new year.
Thanks.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.